Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of November. We just saw the stock market finish a very strong second half of the month in October. Investors are looking forward and saying, what's up for the stock market in November and December? Can this rally continue? Well, we'll take a look at the seasonal trend on a broad market basis today. And also, too, we're going to take a look at the different sectors of the market that tends to do well at this time of year. We're going to use my new Thackeray's 2023 Investors Guide. That just came out. It's just available in stores and online retailers as well. So we'll take a look at some of the sector trades in there as well. I'm also going to take a look at trying to take a look at the performance of the defensive sectors at this time of the year relative to the broad stock market, because last year they gave a really important signal. We're going to start to take a look at that as well this time around. So let's jump right in and take a look at the overall seasonal trend for the stock market in November itself. Here we are using the Thackeray's 2023 Investors Guide. And if we take a look here and we go to November, we can see here that in November, this is a solid month of the year for the stock market. In fact, for the S&P 500 from 1950 to 2021, November has been the best performing month of the year overall. And we can see overall here, it's almost up to 1.8% average here almost. Solid start to the month, typically a little bit flat. And then the second half of the month tends to perform well. Now, it may not happen like that this year, but overall, November tends to be a strong month for the year. And if we take a look at this graph down here, this shows you the daily probabilities over that time period from 1950 to 2021 of the stock market going up here. So solid days overall, 50% and above, except for the one day here in the middle here where we see this a little bit of a dip. So overall, November tends to be a strong month for the year. In fact, November and December are the two strongest contiguous months of the year on average from 1950 to 2021. And even over recent times as well, November has been one of the strongest months of the year as well. If we take a look at the sectors of the market here, I'm going to jump in here and take a look. Now, the top performing sector, this is from 1990 to 2021, and these sectors are ranked in performance on average gain. This last column here shows you the frequency of outperformance relative to the S&P 500, how often the sector beat the S&P 500 in that time period here. And you can see here the top performing sector has been the information technology sector. Interesting. Now, we've seen this sector perform well for so many years in a row that it's really helped to push those numbers up here. Now, we've seen the technology sector lag a little bit this year at times as well. And we saw some weaker earnings as well. But nevertheless, the technology sector tends to perform well in the month of November. Now, in December, it can have a little period where it can pull back a little bit. And we'll talk a little bit about that in a minute. Consumer discretionary is underperforming the market right here. And so this is a tough one for the consumer discretionary sector, but it tends to be on average one of the better performing sectors. Industrials. Now, industrials, look at this here. We've got 2.6% average gain, but more importantly is the frequency of outperformance relative to the S&P 500. 75% of the time, the industrial sector outperforms the S&P 500. In fact, we've seen the industrial sector perform really well recently. It really was a little bit of a sleeper for investors. And what we've seen is investors really switching over from some of the other sectors, saying, well, I'm not sure I want to be in technology or growth. I don't really want to be in defensives. And so they've been migrating into the industrial sector as well. Healthcare, I'm going to jump down all the way down to the bottom here. Energy. Here's a little bit of a warning from a seasonal perspective. This is the weakest month of the year for the energy sector overall, and also utilities tends to perform poorly. But we're going to follow that up here in just a second with utilities because it's an important sector to track. And so let's start by taking a look at that right now on the graphs here. I want to take a look at utilities and its relative performance to the S&P 500 because it can send an important signal for the markets overall. If we take a look here, this top chart is the S&P 500. Now, this bottom or middle chart here is the defensive sectors of the market, including real estate, which is questionable in some people's books. But we've got healthcare at the top here. In red, we've got the utility sector, which we're going to take a look at in a minute. Consumer staples in the green, and the real estate sector, mainly the REIT sector, in the brown here. Now, something happened last year. If you take a look here, what we saw in December, we saw the S&P 500 rally, and then we saw the real estate outperform the S&P 500. So these lines, all of these lines here, are all relative to the S&P 500. So when the line's rising, it means that sector is outperforming the S&P 500, and vice versa. And we saw the blue line here rising. We saw healthcare, we saw utilities, we saw consumer staples, all outperform the S&P 500 in the month of December. Now, I just showed you that utilities tends to be one of the weaker performing sectors in the month of November. Now, that can change a little bit in December. But look, this is not a normal thing. When the S&P 500 is rallying and you're seeing all of the defensive sectors outperforming the S&P 500. In fact, last year in 2021, utilities was the top performing major sector of the market in the month of December. And this was that time. I know it doesn't show up well here, but if you take a look here, this is the yield on the 10-year Treasury note. It actually increased in the month of December. So we had a rising yield, rising stock market, and we saw investors flocking to the consumer, to the defensive sectors. What that was telling us was that investors wanted to be invested. They wanted to remain invested, but they were becoming really cautious on the market. But they didn't want to leave. And what did we see at the beginning of the year? Really, January 3rd, we started to see the stock market work its way down here. And we saw, into a bear market, basically. Now, we could see a rally here take place for the S&P 500 here. But I want to track the defensive sectors relative to the S&P 500. Now, if we take a look at October here, we can see here that real estate underperformed. Now they actually performed okay in this area here. Utilities was the weaker performing sector, which was showing a risk on mode for the market overall. But the consumer staple sector actually performed quite well. But if we see the same thing we saw happen last year, if the S&P 500 moves up in November and into December, and we start to see all of these sectors increasing here and the relative performance to the S&P 500, that could be a sign that we could see this inflection point take place sometime late in December or early January if the market starts to have a really strong rally. So something to watch out for. We're a little ahead of ourselves, but we need to take a look. And that would be particularly true if we see the yield on the 10-year Treasury note increase. I want to use the Thackeray's 2023 Investors Guide as the reference point to help go through some of these trades that occur on a seasonal basis around October and November and into December as well. So we're going to flip through some of the pages and take a look at some of the trades overall, and I'll give some updates as we go as well. So this is the average year for the technology sector from 1990 to 2021. You can see here overall, it looks like it always goes up, but there are times when the sector actually performs better than others as well. And you see this is the relative performance chart compared to the S&P 500 here. We can see here some in October and into December, where the sector actually performs quite well. And the dates that I use for the trade itself is long from October the 9th until December the 5th. And then there's a bit of a break, and then from December 15th to the there's a bit of a break until the next trade starts on December the 15th. And a lot of investors say, well, why take that little bit of a break when it's such a short break? But overall, on average, historically, the technology sector has underperformed fairly frequently in that time period. Now, if the sector has strong momentum, it's a different story, and the sector can continue to perform well. But it's just something to keep an eye on, because we can see some softness for the technology sector from the 6th until the 14th in December here. And if we take a look on a month-to-month basis for the information technology sector here, you can see here now, this applies to all of these graphs here, coming up. The bar is the average, and the cross is the median, and the diamond is the S&P 500. You can see here overall that there's a lot of strength for the technology sector in October and November. and it tends to be a strong month for both of those. And we see here that the average is actually below the performance in the month of December, and the median is really about the performance of the S&P 500. So what that's telling you is that when it performs well, it can perform well, but there are times when it can be a little bit soft in December, and that's really reflected in that gap period I was just talking about overall. If we take a look at the technology sector using the ETF in the US XLK, here we can see, and this is relative to the S&P 500, and we're going to use this graph as a basis here. We did see an outperformance in 2021 coming into the end of the year, and then we've seen this underperformance relative to the S&P 500 in 2022. And we have seen this a little bit of a downtrend, a little bit of a basing here overall. So we're bouncing off support here as well for the technology sector. It really hasn't shown strong momentum yet. We had some really bad earnings for some of the companies in the sector as well. So we really would like to see the sector pick up a little bit as far as its momentum goes. On strong up days, it's performed well, but on some of the weaker days, it's underperformed as well. So we're still looking for a little bit of improvement in this sector at this time. I wanted to show you the Canadian banking sector, because the sector itself, this is the average year for the Canadian banking sector from 1990 to 2021, and this is relative to the S&P TSX Composite. And you can see here there's a period in here where it tends to outperform the S&P TSX Composite Index. We'll just call it the TSX. And then it can be a little bit flat in December depending on what happens. That's really around the earnings, because we see a lot of the earnings typically come out in the last week of November. So here we are in this period, really on a broad period from October the 10th until December 31st for the Canadian banks. And here you can see the Canadian banking sector. Here's October. Tends to perform well on both the median and average basis, and also too as well in November as well. Now, this is interesting in December because look at the median way above the average and above the TSX Composite. So once again, that's telling us that some of the numbers can skew this overall. And so if we get some really weak results, it can really bring down the market around earnings. So something to watch out for the Canadian banks, but we are in a strong seasonal period at this time. Let's take a look at the performance for the Canadian banks right now on a technical basis. So here are the Canadian banks. We're using the ETF in the state, and the Canada, I should say, ZEB, and we're also, this is relative to the TSX Composite. And if we take a look here, we have seen some negative performance like so many other sectors and broad markets this year. But we had that strong outperformance at the beginning of the year and then underperformed. And that was really about a rotation that was taking place in the markets at the time, because the markets started to pull back in early January. Investors said, well, where do I go? And so in Canada, they rotated into the Canadian banks. Then we saw that little bit of a pullback when that finished off. And since then, we've really been consolidating relative to the TSX Composite. Now, that's actually a good thing. It's building up a strong base coming into a strong seasonal period is actually a good thing. Now, Canadian banks at this time, we haven't seen that breakout take place. Here's the support on an absolute basis. And if we take a look here, we're just starting to break through a little bit on a consolidation basis on an absolute basis, I should say. And once again, we haven't really seen that breakout relative to the TSX Composite. But Canadian banks, actually, at this time of the year, coming into earnings, tend to perform well. This is a Q4 report coming up. The fiscal year end is October 31st, so right at the beginning of November, and then they report typically in the last week of November here coming up. So something to watch out for. Right now, we are in that strong seasonal period for banks. They are creating this base case. And the trick really with the Canadian banks around their year end is, if we see a strong rally in the Canadian banks, which probably is not going to be the case this year, but if we see a strong rally, then they start to report, the banks start to report, even if they beat up by a little bit, they can pull back a little bit. But you get a good feel for what's happening in the first, and once one or two of the Canadian banks start to release earnings, and sometimes you'll see a little bit of a pullback in the sector. So right now, coming into earnings, they're still building this base case. So it's still a fairly solid position from a seasonal perspective and technical position at this time. Okay, I'm going to flip some pages here and go over here into October in my book, and then we take a look here. Valero. Okay, I'm not going to talk about Valero today, but here's a company stock that tends to do well. Home builders, I'm not going to talk about today. You can buy the book if you really want to take a look. Emerson Electric actually has a strong seasonal period from October 11th to the December 31st as well. And there was some news out with Emerson as well today. Retail sector. Let's take a quick look at the retail sector overall. The retail sector, now this is going to surprise people. The best period for the retail sector is, most investors will say, well, the retail sector tends to do well into Black Friday. And you're right. But the best time on a seasonal basis is really from January 23rd until mid-April. In this case, until April the 12th. And you can see that here. You can see the strong outperformance. There still is a performance that tends to happen in this time period here. Where it tends to outperform the S&P 500. And it's a very short period, really, from October 28th until, in this case, I've got it until November 29th, but really you have to keep an eye on Black Friday. And on average, after the retail sales reports come out, even if they're good, the retail sector tends to pull back a bit. So you have to be really, really nimble from that perspective. Now, fundamentally, this year the retail sector really could be in trouble as well. But so far, the retail sector is actually doing okay. But you really have to be careful because the fundamentals don't appear to be that strong for the sector. You've got companies announcing a lot of inventory right now. And we're looking at consumer card debt being maxed out and also personal savings dropping off at the same time, which is not a good mix for the retail sector. But look, we're looking at it from a seasonal technical basis, but you still have to know some of the fundamentals. But look, here's November. November as an individual month, the sector tends to perform well. So, here's the average and the median, both up high, which is a good sign. But like I said, the caution for the retail sector is when the Black Friday comes along after that, you can see the sector get hit. If we take a look at the retail sector itself here, we're using XRT. We saw this in this case, and this is relative to the S&P 500. We have seen the retail sector. So we saw this strong COVID bounce, really, and then we've seen it pull back all the way down. But the good news is we've seen this base case happening here. And if we draw a better line here, you can see here that we're really building a consolidation base. We've broken that downward trend line, and we're now consolidating on a relative basis compared to the S&P 500. We've bounced off the bottom on a technical basis as well. So, the sector fundamentally looks a little bit weak, perhaps, but it is in a seasonal period here, and it could, in a very short time, perform. But given everything else that's happening, you have to be a little bit careful. If we flip the page, once again, we end up with industrials. Okay, so industrials, this is an important one to talk about. Industrials have a strong seasonal period from October 28th until December 31st. Now, it tends not to be a big, huge driver relative to the market. It tends to follow the market. But in this time period, it actually does quite well and tends to outperform the S&P 500. And if we take a look here, that these graphs are a little bit squished here, but you tend to see some stronger performance for the industrial sector here as well. It doesn't really show up that well on the graph. But if we go back up to this graph here, on a monthly basis from 1990, we can see here that look at November. Here's the median and here's the average. Both of these tend to be very strong numbers for the industrial sector. If there's one month of the year that you want to be invested in the industrial sector, it tends to be November. We've seen a strong run in the sector itself. And I just want to point out a couple other numbers here. The frequency of being positive from 1990 to 2021 is 78% of the time, which is a strong number, and 75% of the time has outperformed the S&P 500 in the month of November. So these are strong numbers. The sector has performed well it's over the last couple of weeks, so we could see a little bit of a backfilling scenario here. Here's the industrial sector represented by the ETF in the States, XLI, and here's XLI relative to the S&P 500. And I want to point out a couple things on the relative basis. If you take a look here, we can see a little bit of a higher bottoms here, right, taking place all across here relative to the S&P 500. And look at this breakout that just occurred here. We saw some strong earnings in the industrial sector. At the same time, some weaker earnings in the technology sector. Our investors were coming into the industrial sector because of that. So we have seen a little bit of a breakout happen here. it's possible we might see a backfill, especially since we're getting close to being overbought. And on an absolute basis here, look at this here. It bounced off its bottom here, and in this case here, this is a double bottom. So one bottom, two bottom, and then if we have a breakout here on strong volume, the sector could actually do well. So it's actually the sector, despite its strong performance recently, could perform well, particularly if the S&P 500 rises in the month of November. Look for the industrial sector to perform well. Once again, let's flip the pages and take a look what comes up next. We're into the month of November in the book. And we've gone over those graphs. Material stocks. So the material sector in the U.S. is made up of about 70% chemical companies. So it is economically sensitive. But the date here is from October 28th to January 6th. But it tends not to be as strong as the industrial sector, at least in early November. And can sometimes start up later in November. And I'll talk a little bit about that as well. And if we take a look at this graph here for the industrial sector, the material sector here, you can see here, like, it doesn't really stand out as far as a strong performance relative to the S&P 500 here. But it is, if you take a look here, 75% of the time it does outperform the S&P 500, which is a strong number. And that's being positive. And 59% of the time it outperforms the S&P 500, which is not a huge number, but it is the highest number for across the month. So this is the time, if you're going to focus on the material sector, this tends to be the time. And actually as well, in February and March, coming into April, tends to be strong as well. At least if we take a look at the frequency numbers here as well, you see some of the materials companies, like if we take a look at some of the chemical companies like Eastman Chemical, that has a strong seasonal period from January 28th until May 5th. That tends to be a very strong period as well. So we tend to find some of the chemical companies doing well. But the material sector isn't just chemical companies. There's also other companies such as metals and mining is part of that sector as well. And we can see a run that happened in the autumn as well. And we'll talk a little bit about that. But if we take a look at the material sector here, we can see here that we saw this really long consolidation basis on an absolute basis. But look what was happening relative to the market. Okay, in the same time period, up, down, base, up, down. Really, investors were moving in and out of this sector here. We're building another base here, and if you take a look here, we are seeing some higher lows, which is a good sign as well. So overall, this sector is showing some positive signs from a technical basis relative to the S&P 500. We are moving into that time period, which tends to perform well at the same time. Okay, let's flip the page once again and take a look. Well, Home Depot, take a look at my book. It tends to perform well at this time of the year. Metals and mining. So we're going to end on metals and mining because the metals and mining sector can actually perform well at this time. But look at this, November 19th to January 5th. That doesn't mean it starts on November 19th. It could start earlier as well. So, or later, but on average, it's a little bit later in November. And that's a little bit of why maybe the material sector actually starts a stronger seasonal performance a little bit later in November as well. And here, if we take a look at the graphs here, we can see here this is on an absolute basis. You can see here it actually starts to improve earlier in October, but relative to the market, it really is November. We tend to find this rounding bottom take place overall. In metals and mining, on a monthly basis here, you can see December tends to be a strong month for the metals and mining sector. And I'm going to talk about this probably in my next month's video because silver and gold tend to perform well late in the year as well, late in December as well. So I'm going to be talking quite a bit about that because the trade has had a high frequency of success. But metals and mining tends to be strong. Look at this on a median basis and an average basis as well. And now, if you take a look here, for the metals and mining sector, there aren't any really strong numbers, like 80% or 75% positive. So we do see a lot of volatility in the sector, but this month, December, at 56%, tends to be one of the better sectors, one of the better numbers overall. So if there is a time for metals and mining, it is coming up shortly as well, usually later on in November as well. And if we take a look here, it does tend to outperform the S&P 500, not by a lot, but once again, that's the volatility that can occur. So when it outperforms, it can really outperform. When it underperforms, it can quite substantially underperform as well. So you have to watch out for it as well. So where do we stand right now with the metals and mining mining sector? Well, if we take a look at this graph here, we can see here that XME in the States, we're using XME. Look at this long consolidation period once again here. And then we saw this strong breakout relative to the S&P 500 on an absolute basis, the same thing. We've seen it pull back down again. But once again, look at this here. We've seen higher lows. Okay, so this is a good sign overall for the sector coming into a strong seasonal period. And if we take a look here, going across here, because this line continues all the way across, this is really a double bottom here. We're looking to break above this. So if we see that perhaps later in the month, this could be good for the metals and mining sector. So where do we stand in the markets overall right now? Coming into November, well, I've tried to show you a little bit about what's hot and what's not. But once again, November is one of the strongest months of the year. From 1950, it's actually been the strongest month of the year. And it would be natural for the S&P 500 to actually pull back a little bit, maybe at this point, digest some of the gains after the second half of October. But that doesn't negate the fact that we have a strong seasonal tailwind for the markets. Now, anything can happen, and we've seen that in 2020, 2021, and 2022, of course. But it's good to have some strong seasonal tailwinds behind you as well. And investors, if you think about it too, because a lot of investors are down at this time, the market's starting to rally here. They're going to want to mitigate some of their losses at this time as well. So if we do see the market start to move up here, they may try to really get back into the market here. So by the end of the year, their losses aren't so bad as well. Now, there will be some tax loss selling that does take place coming up in December as well. So it's going to be an interesting market. But we could actually see a rally that takes place. Despite a lot of negative talk about the economy, yes, there are some soft numbers in the PMIs, for example. But right now, we haven't seen substantial erosion yet in the economy. Now, that may happen in 2023. I know the Federal Reserve has been raising rates, and it's causing a problem in the markets. But we have pulled back substantially. We could see this rally to take place over the next couple months. At least it has that tailwind to it, unless something perhaps comes along that's a huge negative factor that could upset the apple cart at that time. But from a seasonal perspective, this is the time that the market tends to perform well. Thank you very much for joining me today.